Tip number 4, to avoid a big problem in the future, you need to constantly rebalance your portfolio. The XIV, which was a very successful short volatility ETN, crashed 96% in a single day and was terminated. But we can see here the return at the end of 2017 was 45% a year. It was crushing it right up to that day. Imagine an investor living through that experience. For 7 years, they would have thought they were making really good money. Maybe they bought a nice car with some of those gains, or they put a down payment on an expensive home. Life's pretty great when you're making a killer rate of return. But then things go badly and the annualized rate of return drops from 45% a year to -6% a year. And now you start regretting spending that money. Now, of course, there's many things you can do to protect yourself, but one of them is the simple solution of rebalancing your portfolio. So now what we're looking at is a 50% allocation to XIV and a 50% allocation to a 60/40 stock bond index fund. So before 2018, just before Volpocalypse, that 50/50 portfolio would have been up 34% a year with a 53% maximum drawdown. So again, the person would have thought that they were a baller making a bunch of money. And then after Volpocalypse, the return drops to 8.51% a year, basically back to index level fund performance. But this is what it would look like if the investor rebalanced back to 50/50 at the end of every year. With that once per year rebalance, even after the XIV crashed 96% in a single day, the balanced fund with rebalancing was still up 17.5% annualized over the entire period. So you can see what's happening as the higher risk asset is performing really well. With the rebalancing, you're putting those gains that you're making back into your portfolio as it grows. So you are still getting the benefit of that higher risk asset or strategy, but you're not on the hook for nearly the amount of losses if something terrible were to happen. There are high-flying assets or strategies that can perform really well for a while, but you don't want to be that investor that for 10 years they think they're rich, and of course they adjust their lifestyle accordingly, and then one flash crash or cyber attack happens and they're right back to the beginning. Make sure you are redistributing those profits along the way back into your diversified portfolio through regular rebalancing.